I see that we have a good number of people here today from diverse backgrounds. Yeah, from diverse backgrounds. Welcome, Cynthia. Welcome, Samuel. Welcome, Andrea. We also have Matt. Welcome. We have Emmanuel. Welcome. Jean-Pierre. Welcome. Ube. Welcome. We also have Louis. Welcome, Louis. And Salome. Welcome. Elijah. Welcome. Great. So I think we've got quite a good number, so we can go ahead and start. As I mentioned, my name is Nana Aisha Mohammed, and I will be the moderator for the webinar today. Our focus for today's webinar would be on the value chain, financing, production, trade, and also looking at risk mitigation measures. We have a quite wide range of speakers, and before we go ahead and start, can I have everybody else turn off their videos except the speakers, so that I can go ahead and introduce the speakers. So if everybody else can turn off their videos, so we can have just the speakers on. Okay, great. So I'll go ahead to introduce the speakers for today, and then the topics that they would be speaking on. We have Jason Scarpone. He is the CEO of AFAP, and he will be talking to us about the role of SMEs in regional trade, looking at the output and input value chain, and also looking at the business solutions and the work that AFAP has been doing, and highlighting on some of the impact of COVID on the livelihoods of the smallholder and SMEs in sub-Saharan Africa. We also have with us Emmanuel Azani, who is the Research and Development Partnerships Director for the USAID West Africa Trade Hub, which was just recently launched. And he would be talking to us about the current opportunities within the Trade Hub, looking at the lessons learned and also the implementation approaches that they would be using, and also be able to highlight for us some of the modalities of the implementation of the hub and how we can, as SMEs, access some of the financing from the Trade Hub. Giving us a case study, we would have Oystein Butilin from Yara. He's the Relationships and Business Development Manager for Yara International. He will be talking to us about or explaining better some of the actions or the activities and initiatives that Yara has put in place to sort of like mitigate some of the upcoming issues around COVID and its impact. We also have Michael Zumelo, who is the CEO of Omnifert Ghana Limited, which is a fertilizer blending facility or blending company. And he would be talking about the SME value chain in Ghana and the impact of COVID. on their activities and downstream distribution of fertilizer and inputs to farmers. We will also have on here, we also have Henry. Henry Mina is the Managing Director for Agrimentor. He will be talking about agro-processing, the agro-processing value chain, which is more focused on in the SADC region and the impact of COVID on food security. So thank you all for agreeing to present today, and I hope that we have a successful event. So without wasting much time, I would go ahead and ask Jason to start his presentation.
Right. Well, thank you, Nana, and thank you to everybody for participating and giving me the opportunity to update on some of AFAP's findings in relation to the pandemic. I'm going to kind of jump right in here to describe in the next slide. Do I move down the slide, or Nana, are you going to be? Up, there we go. Okay, thank you. In normal times, AFAP has an existing market information system. We track a little over 6,000 small and medium enterprises, wholesale and retail agri-dealers across sub-Saharan Africa. Now, starting about 2 months ago, we began introducing these COVID-19 impact surveys. It's essentially looking to see what, if any, impacts or disruptions in downstream trade we would find by surveying these businesses. Next slide. Just to give a bit of illustration, this is an example, it looks like from Ghana, of typical value chain. This one we selected is for fertilizer, although we look well beyond fertilizer. We look at seeds and chemicals and equipment usage as well. But for this illustration, use the fertilizer slide, and you'll see an area of concern down at the bottom of the value chain. And there are 3 reasons why we raise this as an area of concern today. And one is that you'll notice it's down at this level where you see some of your biggest incremental jumps in cost buildup. If you look higher up on the chain, and I realize the print is very small, but we start at the manufacturing, and then we have the shipping into port costs, tariffs, into your distribution and retail sales. It's really in those last links, from, let's say, distribution downward through retail out to farmer, that we see these some of the largest buildups along the distribution channel, and that's normal times. Now, and additionally, we see and are witnessing, and I'll shed light in next slides, that this area is particularly vulnerable to what's going on in the pandemic, and is often, I think, forgotten or left out. We do a lot of these webinars. We participate in many others webinars where we talk about the availability supplied, global pricing, the different costs of products, and how readily available they are. But what's really going downstream in purchasing power? What's happening at the lower levels of the value chain is something we're really focusing on now. And what has been revealed through these surveys is not good news. As of today, we have just under 72% of our agri-dealers reporting significant negative impact in their business operations. Now, it's not limited to any one input. Some of this is just other business activities they have crowding in. These stores tend to act like country generals, these general stores that supply all kinds of things, not just fertilizer, seed, agrochemical, but also household supplies and other products. The negative impact of depressed rural economy is sinking in. Now somewhere between 8 and 10 weeks into the pandemic for most countries, we're beginning to feel it. We do, I should mention, have 20% saying either minor or negligible impact, and 8% saying there was actually a positive impact But as we dug into that number, we found a lot of those positive impact reports were due to their competitor businesses either slowing down, shutting down, or not having the finance and trade. In other words, they were on an uptick simply because there were fewer dealers available in an area. That offset doesn't balance out when you look at these numbers. So I'm going to focus the remainder of my time now on the 72%. What kinds of negative impacts and where we're seeing them mostly, and how that may affect you as a supplier of inputs, but also an aggregator buyer of output. You know, your off takers, your large, wholesalers, processors, traders of produce. Let's go on to the next slide. Okay, now a lot of this is just about distribution. Retailers reducing their purchase of inputs from wholesalers. So, you know, you're a supplier, you got your product in, you're working with your normal clientele, these larger, we call them hubs, distributors, but now the retailers are having less buying power. We also see transport disruptions at about 39%. Increased cost in some cases of transport at about 24% of dealers reporting. Some have reported, you know, the need to stockpile early, and in stockpiling earlier, you know, it's challenging for them to carry the finance, and it reduces overall supply. And then actually, sadly, we've had 11% of the retailers in our network actually close shop for some period of time. It's too early to say whether those closures are permanent, but we are seeing closures, and that is distressing. Going on to the next slide. Getting a lot of pullback.
Can we have everybody else mute their speakers whilst Jason speaks? Thank you.
Okay. Yeah, sorry, I was getting a really bad echo there. On this next one, you know, impact on crediting. This has also had something we're looking at very closely, working with African Development Bank and colleague agencies to report on, you know, how is the pandemic negatively affecting both trade and trade credit and access to commercial bank finance. And we've seen a 43% access to trade credit reduction at some level. Now it varies a lot, and we have a lot of detailed data on this, and I won't be able to dig into the numbers specifically, but just broadly to say that 43% of the dealers are reporting a reduction in either trade credit in an existing season or expectation in the next season, what they're hearing from, you know, their distributors and suppliers. You know, you're all in the business. Trade credit's the lifeblood of farming. Without, you know, a substantial trade credit, this clobbers small agribusiness and farmer production. So we're really concerned about that 43% number. 31% on a reduced access to bank credit. We've seen changes in shorter repayment periods being suggested. 20% of our dealers are reporting on that. Cash in banks has not been as big an issue. We're not hearing from the banks a lack of cash, and we wouldn't expect to. We would actually expect most to have a surplus of cash, as again, dealers are constrained buyers. So for those that are doing traditional loans or overdraft facilities, you know, there's less demand for it, and we're seeing that noticeably. And then going to the next slide. And then there's impacts on our smallholder customers. Now, these are various impacts that are affecting production. The countries that were in harvesting or close to harvesting, we saw 53% of the farmers surveyed reporting, and these are farmer customers of our dealers, reporting some impact to their harvesting. The largest part of that being just simple lack of labor agricultural workers not traveling as frequently to the field or being constrained. I mean, many of the countries we had travel restrictions and some lockdowns, and that was beginning to be felt. Farmers are customers. It's how money comes into these shops, and them not being able to harvest appropriately or sell is critical. A lot of their 43% were also reporting some reduction in fertilizer seed at the shops. Next slide. Trying to move quickly to stay on time here. And then finally, we have this sort of impact on market access. The trader's not coming to buy locally as frequently. Some transport disruptions. Again, it's varying on where countries are at in their seasons. And ability to get produce to market. Some market closures, we expect that to come back though, but it's generally creating a constraint. The big items you see is in retailers' ability to purchase. Many of these retail agri-dealers are also aggregators for their smallholder farmer communities. That's at 68%, reporting that they've had some reduction in their own capacity to buy from farmer customers, buy produce from farmer customers. And then 67% in, again, transport disruptions. The transport one, we have some mitigation strategies we're trying to work on now. I think my colleagues from Yara and Omnifert will probably be speaking a little bit more about some of the challenges they face in addressing. But generally speaking, we're seeing a lot of local transport disruptions. And then, the storage is sort of a longer term issue, but it's there for us. We're trying to negate some of the impacts of the pandemic, and limited storage at the local retail level is affecting that. So I'm trying to stay within my 15 minutes here, and I think I've already achieved that. But generally, these are the kind of things we look at as AFAP, and then in response, we're saying, okay, if we're reasonably stable at the manufacturing, supply, import level, and our area of concern is these downstream small and medium enterprises, how do we design interventions with our big supplier colleagues? And I know Yara will be talking about one that help maintain their downstream partners, keep these small and medium enterprises going. And it affects all kinds of trade throughout the region. And the best quote I heard recently from one of our agri-dealers surveyed was, "You'll miss us when we're gone." And I believe that's true. These enterprises are anchors, economic, social anchors in their communities, particularly when you get down to the small town village level. And preserving them is our primary area of concern right now as AFAP. And if you're interested in how these surveys work, the data collection and getting specific data sets and fact sheets in relation to your market, your sphere of influence, either as companies or development agencies, please contact us, and we can provide that and help make those that information available. So thank you very much for the opportunity, and hopefully I stayed within time.
Yes, Jason, you did stay within time. Thank you very much. I think one of the things that was striking from Jason's comments was the issue about reduction in trade credits, and then the limited times that, or the limited trade credit period that is being implemented by the traditional financial institutions. Even looking at the context of Ghana, what we've realized in the last couple of months is that most of the downstream distributors are being asked to pay upfront full payment for the total amount of product that would be distributed to them. And given the fact that everybody's purchasing power has been impacted one way or the other from the COVID lockdowns, we know that that's going to definitely pose a problem to to further distribution to the farmers, and may in one way or the other impact farmers' ability to produce this season. So going forward, I would like to introduce Mr. Emmanuel Azainu, the Research and Development Partnerships Director at USAID, USAID Trade Hub. His presentation will be focused on the current initiatives and the available opportunities for SMEs within the West African sub-region, looking at lessons and approaches that they, as the USAID Trade Hub, would be using. Welcome, Mr.
Thank you very much, Aisha. Hello, can you hear me? Hello.
Yes, we can.
Yeah, so thank you very much for the introduction, Aisha. So in the next couple of minutes, I will be running through the activities of the West African Trade and Investment Hub, the opportunities within West Africa, the approaches we use, and the lessons learned to date. Aisha, can we go on to the next slide? Yeah, so as some of us may already know, the West African Trade Hub is an initiative of USAID that was birthed sometimes in July 2019. The project is a $90 million project with a $60 million portion of that fund targeted at providing grants for SMEs.
Hi, is it only me who can't hear?
Hi, Manuel. Can you check your mic, because we can't hear you? Hello, Emmanuel.
I think we may have lost him.
Yes. Okay. So whilst we wait for Emmanuel to reconnect, I think
next slide, please.
Okay. Okay. Thank you, Emmanuel.
Yeah, so the West African Trade Hub is actually implemented by a consortium of 6 NGOs, and the lead organization is the Creative Associates. We have DARPOG, we have Pragma, CNFA. CNFA means Cultivating New Frontiers in Agriculture. We have Connexus, and we also have FRIP. Can we move on to the next slide? Yeah, so the West African Trade Hub grant is divided into 3 main components. We have the Catalytic Business Concept Grants, which is aimed at supporting agribusinesses and SMEs that have already existing businesses and organizations that we call going concerns, to apply for a grant and be able to expand the scope of whatever they are doing. So that is the first grant that we have, called the Catalytic Business Concept Grant. And then we have a second type of grant called the Research and Development Grant. The Research and Development Grant is actually for now limited to Nigeria, and it's a grant that is targeted at helping SMEs, agribusinesses, and agricultural research institutions that have research ideas, to develop. And the third component of the Trade Hub grant and support is what we call the Trade Facilitation and AGOA. The AGOA component of the Trade Hub's work is actually limited to technical assistance and trade facilitation. Recently, the Trade Hub also brought out another grant program, called the COVID-19 response RFA, in response to the current pandemic, and that is also another grant that is available at the Trade Hub. So in essence, we have three kinds of grants: the Catalytic Business Grant, we have the Research and Development Grant limited to Nigeria, and of course we have the COVID-19 response grant. And finally, we have the AGOA, or Trade Facilitation Opportunity. That does not involve granting, but provision of technical assistance and trade facilitation. Can we move on to the next slide, Aisha? Yeah, so for the co-investment, for all the grants of the West African Trade Hub, there is a grant range. For the Catalytic Business Grant, the range of the grant is $250,000 to $2 million. For the Research and Development Grant that is limited to Nigeria, like I mentioned, the range of the grant is between $250,000 to $500,000. And for the COVID response grant, the grant is between $200,000 to $500,000. So for the Catalytic Business Grant, it's actually open to all West African countries. And that portion of the grant is actually $9.1 million. And agribusinesses, SMEs all across West Africa, can apply for it. For the co-investment fund, the kind of partners that we are looking for, we like partners that are using a market-based approach, in their businesses. We like partners that have a sustainable business model. We like partners that have a high ratio of private investment. Like I mentioned before, for every $1 that USAID has provided, we're expected to attract $5 with it. So we like partners, that have a high ratio of private investment, or what we call leverage. Then we also like partners that have linkages with US companies. That is specific for the Catalytic Grant. For the R&D grant, you really don't have to have any linkage with US companies. And of course, we are looking also at partners that have additionality from US funding. By additionality, we are looking at what we're trying to answer the question: without the Trade Hubs grant, would the organization still be able to go ahead to implement the concept or idea that they are proposing? So depending on how the answer comes, that organization is scored for additionality from USAID funding. Then we're also looking at potential to scale up the activity. We're also looking at how such concepts will impact the employment and empowerment of women and youth. We also look at how easy such concepts organization can attract additional funding. And of course, we're looking at ideas that can help increase the productivity and improve livelihoods of smallholder farmers. Move on to the next slide, please. So the approaches and processes that we take. After we have drafted and released the annual program statement, or the RFA, we go out there looking for SMEs and companies that can help us, achieve the objective of the trade hub, and we create them in a kind of pipeline, or what we call a smart sheet, and then we begin to reach out to them to register with the trade hub and to apply for any of the grants that they are interested in. And of course, after the registration on the trade hub portal, we continue to support those organizations to develop their concept notes and for submission to the trade hub. After the submission, there is a review and approval process of concept notes, and concept notes that are approved are made to proceed to the next stage called co-creation and full proposal development. Now, once the organizations develop their full proposal and submit, there is also a final review and approval of such proposals. And of course, after the final approval, the organization is then free to start, and then the trade hub will release funds to such an organization. Please move on to the next slide. So what are some of the lessons that we have learned, or some of the challenges that we have identified till date? As we know, COVID-19 is a challenge to everyone who is in business. And so the ability of SMEs and agribusinesses to respond to the trade hub in terms of registering on our platform, in terms of developing concept notes, and in terms of even submission has been very slow due to the pandemic. And then we also have a major problem in the area of capacity of applicants. In terms of technical understanding of the grant process, developing of concept notes, and meeting all the trade hub requirements, we have found out that most of the small organizations and SMEs do not have that capacity to develop acceptable, concept notes. And that is a major challenge. The second challenge that we've seen so far is the inability of small organizations and SMEs to meet the co-investment requirement. Like I mentioned before, for every $1 that we are investing, we want to attract $5. And so for a small organization, for instance, applying for $250,000, and the minimum co-investment would be another $250,000. So we have found out that these SMEs and the small organizations find it very challenging to meet these financial and co-investment requirements. So that is it for me from the Trade Hub, and if there are questions, I'll be happy to answer. Thank you very much.
Thank you very much, Emmanuel. Thank you. I think you have highlighted some opportunities for SMEs within West Africa, looking at funding opportunities ranging from $250,000 all the way to $2 million. And we hope that we would, through this webinar, we are able to then help the Trade Hub share that information and then get people more interested. You also did mention some challenges in terms of accessing those funds, and that is the SMEs do not have, some of the smaller SMEs are showing inadequate capacity to submit acceptable concepts. And you also did mention that some of them also do not have the capacity to do the co-matching investment. With these challenges that you have highlighted, I hope that we would be able to then come up with a possible solution to how we would be able to strengthen SMEs' ability to be able to access the fund, because this is an opportunity for SMEs to then build on and then also strengthen their trade within West Africa. So on this note, I would like to invite Henry Minard, who is the Managing Director for AgriMenta, He'll be looking at he'll be having a presentation on scaling up regional agro-processing value chain in the SADC region and looking at the impact on food security within Africa. Welcome, Henry.
Okay, thank you so much. Colleagues, I just want to quickly acknowledge that this study, I was the team leader on this, but it was funded by GIZ. And Imani Development took the lead on this, a Cape Town-based organization, and the client was the SADC Secretariat. And this slide presentation is actually 80 slides long. I've cut it down to about 57. I'm only going to talk about 20 of these slides, but I wanted to include some of it so that it can be made available to you later. I think the main thing in this is that we looked at regional value chains and specifically at agro-processing. And I'm going to talk very quickly about it because I think it's got a huge impact. The fact that we need to develop regional value chains and that the fact to also address issues like the COVID-19 impact. And the second thing I want to mention is that we need to process things that in various regions of the continent. I want to apologize that we're not talking about the northern, the West Africa and also East Africa, but I think the lessons are the same. So I'm going to be very quick. I think the first thing is that we initially identified 6 groups of value chains like wheat, oilseeds, and so on, and then we identified 14 value chains, and we looked very specifically at those 14 value chains. I think the important thing is that there was a need that was identified, and the fact that we haven't got enough agro-processing taking place on our continent and in Southern Africa, and the SADC industrialization strategy and roadmap was also a key policy framework to identify what are the real agro-processing value chains for the region, and that can lead to industrialization. So we did a deep dive analysis, and here are the value chains that we looked at for maize, wheat, and rice in the grain section. We also looked at soybean, sunflower, sesame, cottonseed, groundnuts, and dried beans. And then we looked at cotton, a very important value chain in Southern Africa. We looked also at biomass. We estimate there's about 120 million hectares in Southern Africa of encroachment areas of plants and trees that is indigenous, but you can't use the grasses, and that's mostly because of overgrazing. And we also looked at poultry, but we didn't look at specifically at chickens, but we looked at geese and ducks because of a value add. We wanted to throw something in that was different. And then we looked at red meat, specifically goat meat and beef. I'm not going to discuss each one of those. We developed some findings for that. We did the whole value chain in great detail, and the results were as follows. If you looked at this table, you will see that according to the maize and wheat and rice, if you look at the rest of the world straight with Southern Africa, the whole SADC as a group, you see that we import for the period 2015 to 17 about $250 million worth of maize. Wheat was nearly $1 billion, and rice was even more than that. So that is what we're importing, yet we can produce those things here in the region. Soybeans was a negative value of nearly $600 million. So sunflower was 140, and so on and so forth. So you can see groundnuts is not mostly being used by the people themselves in the country. Dried beans is not big. Cotton seed is also not that large. Then the other big one is cotton, that we import quite a lot of cotton into the region. With the rest of the world, nearly 400 million. Biomass was not really available, the same with poultry. In cattle, we do import a lot, but I want to remind the colleagues here on this webinar that Namibia, Botswana, and South Africa are net exporters of beef. Goats is not big traded, but we expect that goat meat can play a very important role in protein supplies. And I think what is important of this slide is the fact that unfortunately this was done before the COVID intervention, and I can assure you that regional value chains cannot develop well if there is not free flow of goods across borders. I'm going to look quickly at just a very high level, some of the technical barriers to trade that was identified, mostly sanitary and phytosanitary stuff, low quality of standards. Labeling was an issue. And then with all kinds of different challenges identified. Traceability of food products is an issue, as well as the quality of a national infrastructure systems, and the high cost of compliance to go to international markets. And some non-tariff barriers, we all know these things, but trade facilitation issues and NTBs like transport, customs, and so on, a big issue. And then sales tax in some countries, restrictive rules of origin, obviously, and some technical regulation. But for well-developed value chains, I just want to say that we need to address NTBs, the non-tariff barriers, and so that we can get regional agriculture trade can flourish. If we look at some of the challenges and we've identified in the way forward, this is more or less a structure. There are some future growth aspects that we need to take cognizance of, and some challenges and so on the way forward. So population growth is a key driver for food demand that we all know. I think it's very important for integration of agriculture food systems to enhance the regional flow of food. Most food imports are from outside the region, and that is tragic. I mean, actually, the intra-regional trade is only about 12%, and we suspect that is more or less the same for food products. Then the biggest growth was high-value products, and then also intra-regional trade is limited. For cereals, it was quite high, but then in the past 15 years, we have these annual growth rates about 13% for, in general for food in the region. Also important, we need to have locally produced food. We don't want to import that from outside the region or from the rest of the world. Obviously, we can import it from the rest of Africa, but yes, that is important. I think also it's interesting to note that there's huge opportunities to export. South African citrus is the second largest export in the world, but we think that citrus from South Africa will surpass that of Spain within 5 years' time to become the biggest exporter in the world. It's not the biggest producer, but the biggest exporter. So what I'm trying to say is that we can have successes in Africa in terms of exports, not only in the region, but in the rest of the world. So other things, international markets, there are stringent compliances that's needed, and there are many opportunities for processing and for exports and for bigger trade. And I think one of the biggest challenges that we need to produce more food into the in the SADC region itself and import less. We have done a lot of analysis, and some of the biggest challenges we've identified, we call it most significant factors: smallholder capacity and processing capacity. That was the highest responses. The regulatory environment was mentioned as standards and SPS second at 40. If you look at the stable market access and so on, infrastructure, and you can see, we will discuss some of it, but most of it I'm not going to discuss. In terms of the region, there was some challenges with proliferation of standards, and I think also country-specific GMO labeling requirements. There's a lack of traceability. Then there's some mandatory aflatoxin of maize across regions, like for instance for Zambian producers, and there are barriers to trade. And we spoke about this non-tariff measures earlier as well. And then SADC as a region is a big market, and there are many opportunities. I don't want a one-stop border post. There are all kinds of things we can do, but one of the biggest we can do easiest is the non-tariff barriers or measures. And then
hi Henry. Hi Henry, sorry, your screen was not very was messing up. Can you use the slide option so that the screen your slides are bigger for everybody to be able to see? Thank you.
Oh, okay. I can't see that. I'm sorry about that. You know what? On my screen it looks like it's already a big screen. Okay, let me just see. Can you see it better now?
Yeah, so this is a much better option. Yes, thank you.
Oh, sorry, I only saw the big one. Apologies for that. Okay, I'm going to continue here. What we did is, I don't want to spend much time on it anymore. We developed some policy responses according to those most significant factors. And I just want to quickly highlight what those 5 areas. This policy framework came from the African Development Bank. So we looked at development infrastructure and conducive business environment. We also looked at region integration and openness to trade, capacity for responsive to value chains and partnerships with government and private sector, and then establish the policy framework. And I think that was just the framework we used. We took those areas. If you look at the third column there, we looked at what are we grouped those challenges we identified, the most significant factors. We identified and aligned those to a set of policy measures, and we developed some very specific policies. So I'm not going to discuss each one, but this is included into the presentation. I'm just going to move right to the back, to the way forward. Now, I think what is very important that we need to understand that we've only looked at a limited number of value chains, and there are many more, but those we believe were the most important. And I think what is important that we need to understand here is that there are countries within the region of Southern Africa that can produce all of these things. Like for instance, South Africa, we can't produce wheat any more wheat than the 1.5 to 2 million we produce of tons. And the thing is just, but in the region we can produce more wheat, for instance, because of like in Zambia, in Barutseland, in the western part of Zambia. So we need to try and identify those areas, and I think that will also enhance the food security in the region. I think but the problem is that national value chains are not strong, and for that reason we don't find that we have good regional value chains in the region. And we need to look at our competitive advantages for selected value chains. And one national value chain has mastered a cluster of countries around. I mean, we could take it forward to look at global value chains, but the problem is we didn't find a lot of evidence of good regional value chains in Southern Africa. The most significant factors, it's very interesting that most of the challenges need to be addressed at domestic level. In-country conditions need to be addressed and understood. Addressing these will take time, and there's no quick fixed solution. There are structural challenges that we need to address, and there's significant investments needed into the human and monetary capital. Then, thirdly, strategy and process responses. I think policy responses need to be proposed as customized. It needs to be a change for domestic level, and then countries should focus on value chains that have a best bang for the buck. In other words, we need to see at the best value, because we can create food security within a region if we work together and there's no barriers to trade between countries. Barriers have been identified across the value chains and should be addressed systematically. And then value chain specific strategies should be developed to enhance competitiveness. And if we're not competitive, we're not going to do it. All value chain actors should collaborate to ensure successful implementation. And this is the last slide. I just want to quickly say strategy and policy responses still continuing here on strategy and so on. And then regional and global value chains has high compliance requirements and compliance costs as well. And the competition is very fierce and the standards are high. And IFAP, the International Fund for Agriculture Development, is talking about public-private producer partnership. Farmers and agro-processors should collaborate and enhance competitiveness in a spirit of collaboration. And I want to add here as well the input suppliers. We are working and talking about what AFAP is doing. Jason's schedule of all the important things about the challenges that small agro dealers are experiencing in these difficult times. And I think there's a need for collaboration. Private sector needs to understand government, and government need to understand what are the challenges that small agro dealers and small traders are experiencing, so that they can support and help them. And then also there needs to be efficient statutory support in terms of SPS and all these issues, animal health issues and stuff. And then on the last point, I just want to mention there's a great opportunity. There's a market for growth, not only in the region, but in the whole of the continent. We expect a great increase in population growth, but we have a potential not to be an exporter in food and fiber products. Yet, in SADC, we are net importers of those products on agriculture production. We also need to understand that there's an enhanced demand from urbanization taking place on the continent. And then value chains could enhance economic development, both regional value chains and global value chains. And I think, in short, I just want to say, I remember I was working with African Development Bank about 10 years ago, and during the financial crisis in 2008, I was also invited to present the bank at the WTO, and we had the international meeting there, and Pascal and me from the WTO was at that time the Secretary General, and he stood up and he said to the banks, and I mean Merrill Lynch, all the big companies were, financial companies were in that meeting, we were only about 40 people, and he said, please, let's keep the trade going. We cannot stop the trade. And the African Development Bank also funded a $1 billion trade finance. And Jason was talking about this earlier. And I think one of the biggest challenges in the crisis is that we should not close the borders, that we should continue to trade. And that will oil the trade gears to continue economic development, even under difficult and COVID-19 conditions. So I thank you for this opportunity, and I also just want to thank Jason and Sandra and everybody involved organizing this. Thank you so much.
Thank you very much, Henry. Thank you. I think you have highlighted some of the key issues, especially that have been affecting the processing value chain. And if we hope that with all of our partners on board, we can be able to come up with within the discussion session, come up with opportunities and look out for sustained solutions to some of the key issues that you have raised. And I do agree with you when you talk about the need for strengthened collaboration and partnerships along the entire value chain. Especially for me, what I wanted for us to begin to highlight is the de-linking of the larger scale companies and private sector at the larger scale between private sector, stronger private sector partners and governments. And then we have that big gap between the SMEs within the communities not having a say or a place in the discussion or at the discussion table. So that's something we need to really focus on and strengthening. Thank you. So we move on to having Oystein. Just to say that all of the questions, we would be answering questions and within the discussion session. So if you have any questions, you can kindly post the questions in the chat section and kindly at everybody that you all at the presenter, and then we will just make sure that all of the presenters respond to it. Okay, so we move on to the next presentation. From Oystein Botili. He's a stakeholder relationship and business development manager at Yara International. He will be making a presentation on Yara takes action to avert hunger in crisis in the wake of COVID-19.
Thank you. Hello to everyone. Greetings from Oslo, and thank you for this opportunity to share some knowledge with you about what type of action Yara has taken. A bit on the backdrop. Yara was quickly exposed to the consequences of COVID-19 through its presence in Wuhan. And we were very quickly taking measures to protect our employees and our production facilities around the world. That was sort of guiding our focus for a long period of time, how to safeguard operations and look after the well-being of employees. An indication of that is that we have managed to keep our operations running throughout this difficult period. And until last week, I think we didn't have more than 20 cases amongst the 17,000 employees of Yara. But as we were following development of COVID-19 and we saw, how the economics in the world was evolving, and we also started to ask ourselves what type of societal support could Yara as a company with its presence give. And I think it was around Easter time this idea of Action Africa came up, and we have been moving quite fast forward in developing this initiative. Next slide, please. As I said, we were following the development of COVID-19, and it was a lot of focus on the negative impacts and damage that it caused around in the economies. We started quickly also to think about the future and the potential combined impact of COVID-19 adding to the already existing problems faced by many East African countries. You can mention the locust, you had Mozambique faced with a cyclone last year. So we ended up looking at an opportunity to focus on food security, and also clearly recognizing the need of working together. Next slide, please. So what Yara decided to do was to produce high quality fertilizer with zinc for improved nutrition to reach 250,000 smallholder farmers in 7 African countries. And this could provide food for more than 1 million people for 1 year. So we took that as a point of departure, but we are not only producing and bringing high quality fertilizer to East Africa, we also want that to be coming with the right knowledge about proper use of the fertilizer. Yara has always been stressing and focusing on the need of transferring proper knowledge about proper use of fertilizer. The Action Africa will also try to use this opportunity to maybe fast track some of the new transformative technologies that exist in this rapidly digitizing world, and how we could make knowledge available to farmers also through digital solutions. So next slide, please. Action Africa is more than Yara producing fertilizer and bring it to East Africa, and combined with proper agronomic advice, we will secure production of food. We also see this as an opportunity to move forward with further strategic discussions with partners. Action Africa has targeted 7 countries. We will be active in Kenya and Uganda, Tanzania, Rwanda, Mozambique, Malawi, and Zambia. Already now, while we are fine-tuning the detailed operational plans for each of these countries, we see that this initiative is already leveraging important complementary support. To give you a couple of cases, through the detailed planning of the operations in Mozambique, where we will work amongst others with CRUSA, the head of CRUSA has taken this opportunity to also complement the fertilizer distribution with provision of good quality seeds to the farming communities. We have seen a very instrumental positive support from the Agra team in Kenya, where they called all their seed partners for a roundtable discussion on how the Kenya-specific operations could be accompanied with seed distribution coming along with the fertilizer. We see very, very positive response from AFAP, just to mention another case in Malawi, where they are playing a lead role now together with WFP to identify the geographies and farming communities that will be targeted by Action Africa. We see Bayer reaching out, looking at this Action Africa as an opportunity to come along with provision of high quality seeds. And there are multiple other examples on how this initiative is already leveraging most needed collaboration in the international and national community. We have had advanced discussions with the Norwegian Ministry of Foreign Affairs and how this could also be used to scale up and advance fast the presence of Farm to Market Alliance, already making a difference in some countries in East Africa. We have very advanced discussions on how we could work together with World Food Programme in the different countries and make use of not only their convening capacity and political support that they can provide, but also the very significant outreach that they do have in the countries they are present. This is a fast-moving trade. We are already producing fertilizer that will be loaded on a ship in Porsgrunn, Norway, the week starting 22nd of June, arriving in Mombasa and Dar es Salaam end of July for further follow-up through alliances and partnerships that we are busy building as we speak. And there are much more in the pipeline when it comes to complementary additional support that can come through this Action Africa initiative. We, as Yara, will continue to advocate and accommodate partnership opportunities as this initiative is unfolding. I think I'm happy to stop here and rather accommodate any questions from the audience later on. Thank you very much.
Thank you very much, Oystein. I hope that the staff that are affected are getting better, and then hope that, and my prayers to them and their family. You did mention and highlight the large volume of fertilizer being distributed at 440,000 metric tons, and you're hoping, and through this initiative, we'll be targeting 250,000 farmers, smallholder farmers in 7 East and Southern African countries. And you also mentioned Action Africa, and I would like to say, or just to acknowledge that the Action Africa collaboration or partnership is an example of what can be done if we pull together our various strengths, and we are able to then address the challenges that smallholder farmers face downstream. Each of the partners is bringing on board the strengths and that they have, and then also leveraging on the partnerships that they have with other organizations to actually call to action and then address some of the key issues that may arise. So on the next, on that note, I would like to also then invite Michael Zumelo, who is the CEO of OmniFert Ghana Limited, to also talk about some of the challenges that SMEs face in the input distribution, and then the impact of COVID on their operations as OmniFert, and what other initiatives that as OmniFert also been implementing in Ghana to also try to mitigate some of the impacts of COVID.
Okay, thank you, Aisha, and good afternoon, audience. So I'll be taking the topic, impact of COVID-19 on agriculture in Ghana. Generally, the agriculture sector in Ghana has not had a severe impact on COVID when we compare it to trade, tourism. All the airports are closed, and then the financial market. But however, the farmers have experienced some low patronage of their products during the lockdown in Ghana. And then what this means is that there was a lot of purchasing of products from the supermarkets and then from the farmers, which created some form of artificial shortage in the market. And then also the farmers were scared that because of this purchases of produce from the market due to the lockdown, they were also had the impression that if they went onto the market to produce, they may not get enough clients to patronize their products. Also, in reference to Ghana, it's very strong in cocoa and then cashew. In reference to cocoa and cashew, because the ports were closed, we were not able to do exports during the time of the COVID and during the time of the lockdown. But then the government of Ghana made agriculture inputs an essential commodity in order to be able to, send food and then to feed the people of Ghana. So the value chain of agriculture was not affected by the lockdown. But even though it was not affected by the lockdown, transport companies were not sure if they could move, and then there was a system where you could get some passes, but most people were not sure how it was going to work. So for the first 2 weeks, the transportation of goods from one part of the country and transporting of fertilizer had its own issues because the farmers could not get the fertilizer due to the fact that the transport companies were not willing to put their trucks out there. Also, the government of Ghana came up with some stimulus packages for the SMEs, which also helped them in order to stay in business due to the COVID. Some of the market challenges due to the border being closed. If you know, in West Africa, there's a lot of trade between the borders. There are farms in Burkina Faso that support Ghana. Ghana has farms on their side that support Burkina Faso, and also Lomé, and then the Volta region. So farmers that grow products in Ghana that send to Burkina Faso were not able to send their products there because the borders were closed. So it did affect them in terms of some post-harvest loss. And then the same issue also with farmers who were based in Burkina Faso. Again, the main challenge was transportation of goods from one part of Ghana to the other. In the fertilizer business, the transporters were also not willing to be on the road during the first 2 weeks of the lockdown. But things stabilized. There was some form of education, and then they realized that they could drive around with permits and they would not be harassed by the police. Talking about Omnifet, we normally buy our raw materials 6 months ahead of time. So we were not affected by the lockdown or the COVID, bringing our raw materials in for blending, because we had most of them were procured before the lockdown. So we were able to do our blending for the cocoa board, for the planting for food for jobs. But the issue again came with transportation, and then the laborers that come into the fertilizer warehouses to load the trucks and unload the trucks, because they were not sure if they could come to work or not. And then, again, not sure of how to handle the lockdown, but the things normalized after a while. Also, for us, we had sufficient stock, so even to take care of the next season. But then, if the situation gets worse, then we'll be falling into some uncomfortable positions. But looking at the way the world is going now, markets are opening up, so it shouldn't be a problem. Also, what we did was going around different communities and then building capacity and then talking to the farmers about COVID and educating them in order for them to understand that, yes, there's a problem, but we cannot run away from the problem, but they all need to be back at work in order to solve any issues of food security. So we we spoke to the farmers. They had to wear their masks. We also had to wear a mask. We had to explain a lot of things to them, which for me was very interesting, seeing that farmers are one of the people who are very free, but in occasions like this, they had to wear masks and then listen to us. I think that there are also some good opportunities in reference to COVID for the SMEs. Because of reduction of inputs and imports, the SMEs can now build capacity locally, which means that whatever they produce, it's now being consumed. Unlike before, goods have to come from Burkina Faso or from Europe. But with the lockdown and then with the COVID, we have to now localize. We have to localize our food crops, rice, maize, poultry. People have to now tend to the local farmers and then the local inputs. And the opportunities that have arisen from this is a lot of acceleration of production. People are getting good money for their yields now, and then also increase in processing, and then local development of industries, which the government is spearheading. And then the private sector is also collaborating with the small SMEs to build capacity, to also build capacity. In reference to some of the opportunities, again, is the e-commerce and then the structured trading, which I think the Commodity Stock Exchange in Ghana is also playing a big role. The borders would be open soon. The airports are still closed, so there's going to be a lot of opportunity for trading in terms of fertilizer, seeds, some outputs between the landlocked countries and then Ghana, which is Burkina Faso and then Lomé. So to conclude, I think that the crisis has brought a lot of opportunity for Ghana and then for Africa as a whole, in order for us to develop the SMEs, to develop local processing plants, and then also develop, strengthen the local farmers for them to be able to meet the demand of the country. So thank you very much.
Thank you, Michael, for highlighting both the positive and the negative impacts. And I think you have mentioned that the positive impact has been the increasing demand for local produce, and then also the increasing focus for the increasing focus and support to the local processing value chains within countries in West Africa and also in Ghana specifically. I do think that also another thing that you've highlighted is the fact that stocking up is important, and then also pre-planning is also important, and that has been one of the things that supported your organization to keep on producing even during the lockdown. Similar to what Jason did mention in his presentation, you have also highlighted that the purchasing power downstream has been affected in one way or the other, and that may also have an impact on the production of farmers. Thank you very much. We now go into the discussion session, where we would have the opportunity to, in the next 5 minutes, we would have some of the questions that have been posed displayed on the screen, and then we'll go through the questions and then also have some feedback in session. Thank you. So whilst we wait for the projection, I see some questions in here for Michael, and some of the questions that have come up for Michael, is that have you thought about innovative ways of selling fertilizer and training farmers in the space of social distancing, and how has OmniFert been able to do that, since training and capacity building is one of the core areas that OmniFert uses to promote its business?
Okay, so what we have done is to use technology to train the farmers would be a challenge due to connectivity of internet, and they're in the rural areas. So what we have developed is going in there, explaining social distancing to them, making sure that they are wearing their masks, and then do the training in that manner. But we're looking at different options, and we're looking at different options to see how we can use technology. But till the farmers start using smartphones, and then till we have better internet connectivity, it's going to be a challenge.
Yeah, so I do agree with you. As AFAP, we also have some capacity building activities that have been affected by the COVID and then the social distancing. We also have been struggling with ways of addressing that, and that's how come we came up with having to do more of using our new technology and platforms that have come up. And that's what we're using to send quick messages to farmers. And I think that's another way that OmniFert can then also promote some of the products, is by using the SMS messaging, and then also using the platforms and then the new apps that have come up on the market to be able to send information. I have here a question for Oystein. A question from MacLeod says that there are several initiatives in the target countries to develop crop and area-specific fertilizer formulations. How do the fertilizer formulations to be donated speak to these initiatives, with an understanding that Yara is part of these initiatives in the target countries?
Yeah, I mean, this is about taking the capacity of the production facility in Porsgrunn, Norway, to produce high quality NPK with zinc, Yara material that has already been in the market for quite some time, also performing extremely well for the maize crop. I think on average, also with conservative estimates, this can triple the production. We are also conscious about all these ongoing efforts to address soil health issues and come up with more localized blends. So, one way of looking at it is that this is a one-off event. I think that's the best answer I can give you, to be honest.
So also another question that comes up is in terms of the fertilizer application technology, because we do know that there are some we have challenges of fertilizer application rates of farmers, and and how we address that. So for AFAP, or for Henry is asking, Henny is asking that how has either Omnifert or Yara been able to address the issues of farmer application with technology?
This has been part of our business engagement in Africa from day one. And in this specific Action Africa initiative, we will work with our own capacities, but also clearly recognizing that we need to work in partnership with on-the-ground capacities. Let's take Zambia as a case where we have advanced discussions with the conservation farming unit and how we could make use of the significant infrastructure and operational presence of conservation farming unit, and make sure that the fertilizer that will be strategically distributed in selected regions of Zambia will come and be an integral part of the training and knowledge sharing that the conservation farming unit typically apply. In the context of Malawi, to use another country case, we have already advanced discussions with AFAP and AGRA, and to link up with the significant work that they have already done, where knowledge transfer to the farming community is an integral part of it. So if the question is related to whether this comes as an initiative distributing products without a conscious effort to make sure that it's responsibly, effectively, and efficiently used, as well as good agricultural practices, this is something that we are very conscious about.
So thank you very much, Oystein. So looking at the next question, we have some questions here that we would like to go for Yara. It says, what will be done to, I think we've already addressed that. We've also addressed some of the questions that have come forward. Okay, so looking at the early supply means that for Michael, they said early supply of fertilizer means that there will be some static money, and so they're asking how would Omnifert deal with the situation?
Okay, so with Omnifert, maybe the advantage is our size, and then our trade lines are between 12 months to 18 months. So it falls within our financial model. So it doesn't really affect our bottom line because we're not paying interest on our trade lines. So maybe that's an advice. You know, if you use trade lines, then you don't pay interest. You save money.
Okay. Thank you very much, Michael. So if you look at the questions that we have here, we have some questions for Emmanuel as well. So the question then becomes some of the key issues that you have highlighted in terms of the challenges of SMEs, in terms of coming up with bankable or acceptable concepts. What are the initiatives that the Trade Hub would be putting in place to be able to address some of those key issues?
Okay, so one of the strategies of the Trade Hub in helping SMEs be able to submit acceptable concept notes is we have some staff now that we have hired who now work hand in hand with the applicants, to help them to fine tune and review their concept notes before submission. So that is number one strategy. The other strategy is the fact that we have also kind of opened our doors to some consulting organizations who are working with select SMEs to help them, one, develop their concept, two, help them to assess sources of funding and provide whatever capacity support that they might need. Hello, that's it.
Thank you very much. Do we have, we're actually done with some of the questions, so I'll give an opportunity for others to log in and then ask the questions directly. If we can have one person ask a question next. Hello?
Hi, Nana. I saw some questions on survey numbers and linkages with government support, so I could tackle those while you're
Great.
Okay. In terms of the survey number, all of the 6,000 retail and wholesale aggregate, about 210 wholesalers and the balance in retail distribution, we have integrated into the system. Now we're current with about 3,200, which that means is the information that we're surveying and sort of drawing information analytics from is at about 3,200 enterprises. Farmer sampling is a bit different because it is in effect sampling. We're not saying we're covering all the farmers. We use the geographic spread of the dealers to get sample groups. And a survey can be a few hundred farmers in and around different stores. But what we try to do is almost take like a polling technique where you balance out for gender, you balance out for a crop, or you balance out for different other specifications, and you can create control groups. You can control for who's buying directly from the dealer, who's working through a farmer association, different things like that. But usually farmer surveys, they happen more frequently, and we're grabbing sample sizes of a few hundred. The businesses themselves, that's an ongoing digitized automated system. In terms of working with government, it was a good question on that. It really varies by country in terms of what mitigation strategies they're putting in. I would say most of the governments are leveraging or concentrating efforts in and around existing subsidy programs where they have existing subsidy programs. And that's really interesting for us and something we're looking at closely because in some ways where government is less entrenched in the subsidy, we think they're in a better position to respond, because unlike traditional subsidy that really focuses on farmer purchasing power and or lack thereof, this depression in rural economy now has more facets. Like I mentioned before, trade credit, transport, multiple disruptions going on at once, and the assumption that you create the subsidy and the local delivery system is going to be in place is no longer the case. So we are warning our friends in government that we're going to have to make adjustments and tinker with existing interventions so that those new constraints that may not have been there 6 months ago are also addressed. Thank you.
Thank you, Jason. I also see a question about what some initiatives that governments are putting in place. If we have any idea of initiatives that governments are putting in place to mitigate some of the challenges that we mentioned. I think you did touch on some of the answers for that. And I just also wanted to mention that in some of the West African countries, what governments are doing is that they are releasing stimulus packages. I think Michael also mentioned the stimulus package that has been implemented in Ghana, where we have support for about, I think it's 5 million Ghana cedis as support to SMEs within the country. The challenge for the implementation of these kinds of stimulus packages is that the key target groups, which are the farmers at the lower level, and also some of the key SMEs along the input distribution structure or value chain, have been disqualified because they do not employ the target number or the set benchmark for each of the companies to attract this kind of stimulus package implementation. So that then leaves a gap of funding between $500 to $250, $250,000. Most of the initiatives for funding that are being announced are for $250,000 upwards, but we then have a last mile funding gap, which would then be the issue of finding financing that would address financing for $250,000 from downwards. So Jason, if you can give us a thought about how then do you think we will be able to come up with this kind of a kind of financing scheme that can then address that last mile gap?
Okay, thank you. I think it really begins a little bit higher up the value chain. I think it begins in wholesale and retail distribution, cost reductions to farmers by focusing a bit more, I think, on the trade financing, to be honest. One of my concerns, or one of the concerns I keep hearing, it keeps popping up, is this idea of, well, we're going to create new loan programs, we're going to create additional credit programs, and then you're going to go through a long, exhaustive process of applying for those credits and pay standard interest rates and fees and things like that, but we'll make more credit available. I'm reasonably sure from what the data is telling us that's not going to work, simply because this is a time to reduce the cost of money, not increase the cost of money. And so in trade finance, what I mean is if public sector and corresponding development finance institutions, and I know the AFFM and African Development Bank is working hard on this, can create insurance schemes that underwrite trade finance down, we can mitigate some of the risk of cost escalation to the farmer, even with some of these disruptions. If the product is still moving down through the channel on credit, you will find the customer demand is still there. If we put it on all those actors to go borrow from a new credit program, I think the response is going to be good luck with that, because we've lost remittances, both international remittances we've taken a hit on, and urban to rural remittances. I think somebody mentioned that the tourist industry's gone in most of our capital cities and most of our beachfronts. There is less cash in the system. That's not a time to increase expensive borrowing. It's a time to look at how much trust do we have in these farmers coming back. And if we have it, we're going to have to insure it and keep the channel of supply going. And compliments, hats off to my colleagues from the supply industries that spoke, because it's they're doing very important work right now. Thanks. Anna, did we lose you?
Hello? Hello?
Hello? Yes, we can hear you. Yes, we can hear
great.
you.
Great. So I was saying that given so I was throwing back the question to Emmanuel, and I see that Marie Claire is here from the AFFM, and I was asking if, given what you just talked about in terms of this not being the season or the time for us to be looking at the cost of trade, are there any, especially for the AFFM, is there an initiative or something that the AFFM would be looking at in instituting to reduce the cost of trade or the cost of borrowing from the fund? Then that would then strengthen the input distribution systems within countries. Because I do know that they are looking at setting up funding that would then help countries to strengthen their input distribution systems.
Thank you for giving me this opportunity. And you're right that AFFM through AFDB, we are trying to see what would be the options that will reduce the cost of fertilizer to farmers. For instance, for the moment, with even AFAP, the trade credit guarantee, we are implementing in Tanzania and Nigeria. Those are able to even help agro dealers to get inputs and on credit, and without imposing additional costs related to involvement of commercial banks. So this is one of the options that are able to address that. And we are having similar as well with OCP, which is even most appropriate because it helps to farmers actually to get access to inputs on credit by paying only 20% of the value of inputs upfront payment, and they will pay back the balance, the 80% remaining on harvest. So this is quite important, that because it also helps to farmers to be connected to aggregators, so they have their market, their commodity market secured, and without as well any other additional cost, and they get inputs on negotiated rates. As well, AFDB and Afreximbank and UNECA, we're having also discussions to see how to help government during this period to secure financing to agro dealers in different countries that will allow them to have inputs to distribute for farmers with using trade credit guarantees as well. So briefly, this is what is being done, but also in the African Development Bank is providing assistance to countries, to governments to provide inputs to farmers, fertilizer, seeds, and crop protection products through smart subsidies and using existing systems that may allow them just to subsidize part of the inputs to farmers. Thank you very much.
Thank you very much, Marie Claire, for highlighting and also giving us a brief on what the activities that the AFFM and the African Development Bank are doing in response to COVID, and then also looking at strengthening SME activities in countries. So Emmanuel, I can see that you wanted to also respond to some of the questions I threw to you. If you have anything to add on to that, and if not, then I go back to some of the questions in the chat.
Yes, I've actually responded to all the questions in the chat. But if you want want me to respond to a particular question, you can raise it, and I can do so.
All right, so thank you. I see in the chat here that Chris is asking that given that the access to market for smallholder farmers triggers increased uptake of inputs, that do we have an example of SMEs that have implemented both output and input models successfully? I think maybe what I'll do is that I'll share with you, Chris, if you drop your email in the chat with some of the activities that AFAP has been implementing using the value chain approach with private sector partners that do off-taking and processing. I also have a question here that Chinedu asked that he heard about the trade guarantee being implemented in Tanzania and Nigeria, and he wanted to know how and through which channels it's being done in Nigeria. Chinedu, I would email you the trade credit guarantee documents that we have for Nigeria and Tanzania. AFAP is actually the implementing partner for the trade credit guarantees for the AFFM in Nigeria and in Tanzania. We also have a question here for, we have somebody here who says, Guy Pearson, could you consider agro-processing opportunities in the Eastern Cape and Eastern Cape province in South Africa? I think that we would then have to talk to Henry and look at what opportunities are there in the Eastern Cape. Yeah.
Hello? I did some work there not long ago, but yes, the wool is doing very well there. The other one, Rosemary Dupree, is on the call here. They've done a lot of work on this subtropical fruit. It's a new industry there for the past 20 years. They've done a lot of work. The Agriculture Research Council from Nelspruit, the Subtropical Institute. And I think the other area that we looked in at the time was maize, but maize are not very competitive. But in the villages, you find that the maize prices are about 1/3 higher than the commodity prices in the commercial trade because of the distance people. But there are great opportunities to process and add value in the Eastern Cape. And oranges and those in certain areas, the citrus fruit are doing very well. But there's great opportunities for goats, commercial goat production, and then also the cattle farmers need to commercialize, and they need to move away from traditional cattle herding, but to make it a more commercial venture. And that is one of the greatest opportunities. But they will have to plant pastures in winter. Otherwise, it's not going to work. So that's a quick answer about the Eastern Cape, but people can write to me. They can get my contacts from AFAP.
Thank you, Henry. So I see a question here about quality control, especially within in terms of input quality control, and how the companies are addressing quality control issues, especially with the fake and then tampering and tampering of products. For Omni first and for Yara, I think this question will be directed to you, if you want to answer, and if you can answer these questions. How are you addressing the issues of quality control and also tampering of products? Michael Zomello, if you're on, can you try to address the question of how you are addressing the issue?
Okay. The question again?
So the question is that in the wake of COVID, we know that there have been issues of quality control and then also in terms of tampering of products along the value chain. And this may have been exacerbated by the COVID situation. How is your company addressing that issue of quality control and also tampering of products, especially within this COVID?
Because I think this is news to me, because I think COVID has brought in less contact with the products. I mean, that is what we're noticing. Because if you're blending, let's say goods come from the port. I'm using Ghana as an example. The goods come already already blended for a particular company. We have a company called PPRSD, it's a government institution. They are at the port. They take samples of the products before it is bagged, before it gets to the distributor. So I don't think Ghana is experiencing tampering with COVID due to the fact that there is less vehicles on the road, and then there is more demand for the products by the distributors and farmer, because they are not getting it as quickly as they would have gotten it if COVID was not in the picture. When it comes to those who blend, like us and Yara and Co., we all follow a very strict quality control, protocol. And again, PPRSD in Ghana would come and take random samples and then test the product. The same thing with cocoa board. So it's news to me that there's tampering along the line because of COVID.
Okay, thank you very much. I think, hi, thank you very much. I think for us, one of the things that we've noticed in the work that we do is that the tampering doesn't happen at the company level. It happens most of the time at during the distribution, from moving from your end all the way to the farmer. So between the distributors, the key distributors, to the farmer. But I'm sure on the next session we may have some of the downstream actors on board who could then provide some key answers to that.
But actually, but you are aware that in Ghana, PPRSD is very strict, and they move from distributors' warehouses and take samples. So in Ghana, the game is different, or they have put in different rules and different checks.
Right now, we may have those strict rules and regulations, but the tampering does happen. I don't know if Oystein would want to talk about the situation of Yara.
I mean, we have in the past taken different measures to deal with counterfeit products, even collaborating with the police. But just quick, the 40,000 tons of NPK that will soon be on its way to East Africa, that will be brought and be a bulk product arriving in Mombasa. It will be bagged in specially designed bags for this Action Africa with QR codes attached for traceability. So we are putting a lot of measures in place to make sure that we could trace the product all the way down to the farmer.
All right, thank you very much, Oystein. If we have any more questions, can you kindly post your questions here? I'd like to take this opportunity to thank everybody for participating in this webinar session. Jason, if you can kindly give us a closing remarks whilst we wait for if there are any other questions. I think we've done quite well on time, and we've got about 7 more minutes.
Oh, great. Well, thanks, Anna. First, a big thank you to you. A great job on the facilitation, and for all our speakers and participants. We hope to keep the dialogue going. And again, I would just offer from our side to be available and any information. It's a very fluid environment right now. We're seeing changes, some positive, some negative, that we we track, we hear, and we investigate, and I know many of you do the same. And so the more information sharing we can have, we can anticipate disruptions, we can anticipate some of these constraints, and work together. So I'd just like to say thank you, and we hope the conversation continues.
All right, great. So Jason, just also for you to highlight, what is the key message from you in terms of what call to action would you want to place for the partners that are here today?
Call to action. Very difficult with such a large group. But I would again, and this is clearly showing my biases, but I'll say it anyway. Looking at the role of small and medium enterprise in delivery of inputs and aggregation back to market, let's ensure that they continue to be part of the discussion. I think we have several on the call today, agri-dealers at the medium scale and then at the small scale. But I would really implore everyone to talk to local business and make sure they are okay, ready to deliver. Because I think, as I mentioned before, or I referred to as before, from one of the dealers' comments, we will miss them when they're gone. It's very, very hard to replace small, medium enterprise quickly. It's very, very hard to rebuild distribution systems. And this is not unique to Africa. It's not unique to agriculture. Places all over the world, global depression, are wrestling this idea of stimulus to keep local enterprise going. The big players can weather this storm easier. Their finance is designed to ride out these ups and downs in change. But as is being discussed today, what happens downstream to reach our smallholder markets, or in those first efforts to get back market access. I think a few people mentioned the offtake and the buyers and movement of product. And I think, as Michael mentioned, yes, there are some new opportunities: local food consumption, improvements or increased demand for both domestic and regional trade, as opposed to just foreign imports. All of that creates new opportunity, but we're going to have our ear to the ground, literally, and keep taking the pulse of our locally owned and managed business partners. That would be my my kind of closing call to action.
Thank you, Jason. Thank you. I see quite a lot of posting of emails in the chat group. We will be sharing the link and all of the documentations that have been that have been used in terms of the presentations. We will also share all of the related documentation for the trade credit guarantee that we are implementing in Tanzania and in Nigeria. I also see Chinedu also mentioned that affirming the conversation of the tampering, and he's also talking about the cost of fertilizer. So we will also continue the discussion in the next session. I think in the next week we will have another webinar session, which will then be focusing on the last mile delivery of inputs. Thank you very much, everybody, for coming, and we hope you have a lovely week. And let us not forget some of the key actions and takeaways from this. I think I did write some of the few things that have been spoken and have been mentioned and by some of the speakers. Henry did mention that the national value chains are not strong at the moment and they need to be strengthened. And he said the structural challenges need to be addressed, and it's not going to be a quick fix, but it will take time and it will take a lot of consistencies. Another thing that Jason also mentioned was that the trade credit is the blood lifeline for the agribusiness sector and needs to be maintained or needs to be strengthened. We also talked about the shortened period of credit provided to SMEs, and that is also an issue that when we go back, we need to focus on and look at how we can then come up with alternatives and restructure or redesign some of the initiatives that we are coming up with to be able to address some of these challenges that have been highlighted today. Thank you very much and have a lovely day.
Thank you, everybody.
Right, thank you, everyone.
Thank you, bye.
Thank you. Bye-bye.
Thank you. Thank you.
Thank you very much.
Much appreciated. Thank you.
Bye.
Thank you.
Thank you.
Thank you and bye.
Thank you.
Thank you, everybody. Thank you, everybody, and bye. Blessed one.
All right, thank you.